Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, August 5th, 2019, day which we might be calling for a while Black Monday. Boy, what a day. And what a day for me too. I woke up sick this morning. I feel like I have a flu, and so I got up, took a look at the market, and then I felt doubly as bad. So anyway, I apologize, my voice today. Hopefully we'll make it through this. Let me just make sure everyone's coming through okay. Hope everyone's doing well and they had a good weekend. Boy, what a day in the market. So we're going to have to analyze this and see what can be done at the end of the day, if anything. Boy, unbelievable day. So I just want to make sure everybody can hear me before we get rolling. All right. So the plan for today, first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at my current positions, when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to do just a few minutes on some trader psychology, and then we're going to come back. We're going to go through each one of the stocks in my watch list. We're going to take a look at all the technicals, RSI levels, MACD, moving averages, V1, V2s, ATR channels, and we're going to see if there's any potential buys for the end of the day. As most of you know, I like to base all of my buying and selling decisions on the closing prices. I feel like that is when the market makers and large institutional financial institutions come in, move the market around to the most valid price of the day. So that is why I make my buying and selling decisions there. So, and then after that, after the market closes, please let me know if you have any questions. Just type them in. Don't be shy. And I will try to answer them and clarify any questions that you have. So that is the plan for today. So let's go ahead and get the legal disclaimer taken care of, get that out of the way, and I will be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Alrighty then. So the Dow is down a mere 900 points. The Nasdaq's down 321, and the S&P is down 103 points. What a day. Obviously, this is the worst day we've had for 2019, and I'm sure it is up there in the top 3 or 4 of the worst days, point-wise, in the history of the market. So, all right, well, let's take a look through my positions, as painful as this is going to be, and we will see what we're going to do with these today. All right, so I did buy the SPY. I bought that Friday here at 264.81. I bought that because, you know, we'd come up here up to the third channel. We had sold off for 3 strong days. We finally rallied at the end of the day and were able to close above the 50-day moving average. My stop on this is a close below the 50-day moving average, but you can see this is just completely run away. We're at a 2279 RSI. So, I mean, it's unbelievable down day. So I definitely will be selling this at the end of the day. We were not strong enough to hold the 100. We were not strong enough to hold the 30 RSI. So this chart is basically broken. You know, one thing I do want to say, you know, you guys always hear me talk about position sizing and taking a conservative position size. Well, it's days like today why that pays off. I mean, this is a big down day for me, no doubt about it. But, I never put more than 60% of my capital to work at any time, right? I might have 10 position sizes, I'm sorry, 6 positions with 10% position size. That gives me 60% of my capital, and you just never know when these kind of days are going to happen. So, yeah, obviously, this is a horrible day, but I can take a little solace in that, I don't even have 50% of my capital in the market. So, you have to look at the positives on days like today, right? But this is just a reminder to please always position size correctly, because you might get a day like this and you don't want to have everything at risk. All right. All right. So that is diamond. We are going to be selling that at the end of the day. All right. Over to IWM. So I did buy IWM back here on June 28th when we had the 1050 crossover. This is a good profitable back-tested approach over the long term trading IWM. I did buy only a half a position here because it was outside the channel. We'd had 2 strong days up. The next day it did gap up. We got out of 25% of my position. Then it just kind of moved sideways, did have some profit targets on days that it was up. Then I re-entered, added the second half of my position here back on the 23rd when we had a V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1, day 3 closes above day 1. So I was able to sell some up here, and then I reloaded here, and then I was able to sell on this move back up here. So I do have about 30% of my position left. Thankfully, only 30% before we had this big move down. It did hit my emergency stop today. I have an emergency stop. Generally, I will base my stops off the close at the end of the day if I lose a certain support level. But I use a 5% emergency stop intraday in case we have a day like today. So I did go ahead, get out at 147.10. Glad I got out there at least. It is lower than that. So we are out of Russell for the moment. We're at a 31.49 RSI. So we'll have to watch this one, see if we can get it to close under and then back over, and that might be a re-entry point there. So Merck, well, I did buy Merck here on the 31st of July. We had earnings, it moved up, came back down. It was able to hold this previous support here. And over the last few days, it had bucked the market, which I'm grateful for because, today wasn't our only down day. We had some pretty big down days the last few days as well, and it actually moved up, which I was thankful for. But today it looks, at least right now, it looks like it's going to close below the 50-day moving average, which was my stop. But I did take some profit targets up here, luckily, and that's one of the reasons why I like to phase out when the market gives me something. So yes, this is going to end up being a losing trade, but it's not going to be as bad as if I had not have phased out. All right, next on deck. So yeah, if this closes under the 50, I will definitely be getting out of here today. Well, excuse me. If you guys are just listening, I woke up with the flu this morning, so I'm struggling through this. I did buy Nike. I bought that Friday right here when we rejected the 200-day moving average, closed back above it. My stop is a close below the 100-day moving average, as we're obviously way under the 200-day moving average. So I will be exiting this here. Hey, it looks like we're getting close to being down 1,000 points, if you guys can believe that. 1,000 points. Unreal. Unreal. Obviously, I will be getting out of Nike here at the end of the day. It's a 24 RSI, lost the 200-day moving average. So, this is very concerning what's going on in this market at the moment. Very concerning. SPY. All right. So, as many of you know, I do buy the SPY at the end of the day each day, and I sell it first thing on the open. I did buy it Friday at 292.62, sold it this morning at the open at 288.10. Did take a pretty substantial loss. However, obviously I'm glad I missed out on the rest of this. So in case somebody's new, I just want to show you why I do buy the SPY each day at the end of the day. There's two options. You can buy the SPY at the open each day, and you can sell it at the close each day. If you did that since 1993, you would have actually had a negative 13.9% return. But if you did the opposite, which is what I do, I buy the SPY each day at the close, and I sell it first thing the next morning at the open. If you do this approach since 1993, you would have had a 634.2% return. So buying in the morning, selling in the afternoon since 1993, a negative 13.9%. Buying in the afternoon, selling in the morning, plus 634.2%, meaning that all the performance from the SPY and after hours came during the all the return from 1993 in the S&P came in the after hour in the pre-market session and then was sold into the close. So this is why I buy it each day at the close, sell it first thing in the morning. The blue line here is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. It's not even close. So this is a good edge. It's a good approach. It's a long-term approach. You always have to position size correctly because there are significant drawdowns that happen. So you want to make sure you position size correctly so you can let that edge play out for you over time. So I will be buying this again today. One thing I do want to point out here, this orange line here, 285.58, this is the 30 RSI. If the S&P somehow were able to close back above this 285.60 level, I would go ahead and enter a position here because it went under the 30 and back over the 30. But as long as it stays under this line, as long as it stays under the 30 RSI, I will not be buying it for a normal position, but I will be buying it for my regular overnight trade. All right. 1 second here. All right. Can everybody hear me okay? I just want to make sure everybody can hear me. All right, on to XLU. All right, well, I did buy XLU on the 1st of August when we had a V1, V2 signal. Here is day 1, here is day 2, here is day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. This is a valid V2, happened in the value zone. Did move up the next day. I can't remember if we hit a profit target or not. Was actually up today at one point today and just has completely reversed back. Halfway of this bar here is halfway of the washout, bar. So this closing under here today will be my signal to go ahead and get out of the position. So that is it. That is it. Diamond, we're going to be getting out of the Dow with the close under the 50. IWM, I did hit my 5% intraday emergency stop. So we are now out of IWM. Merck, it has a potential of us keeping Merck here. The 50-day is at 82.63, so we're very close to that. If it can close above that 50, I will keep this trade because that was my trailing stop, was the 50. Nike, the close under the 200, obviously be getting out of that. SPY, if it closes back above this orange line, it will close back above the 30. Excuse me. And I will buy a regular position of that, but if not, I'll just go ahead because I always buy the SPY at the end of the day. So regardless of where that closes, I'll buy that at the end of the day. And then XLU close under here. So all right, where are we at? Oh, we're only down 864 now. All right, Hey, listen, before we get on to going through the watch list, I did want to do just a little, I did want to do a few minutes on some trader psychology. This is from Trading Composure on Twitter. I really, really like this channel. He has great posts every day talking about trading psychology and all the different ways to look at it. But here he says, when trading, you absolutely have to keep your focus on the longer term picture. You can't just bail out on your strategy the moment it starts generating a string of losses. You have to see it through to the end. Consistency starts with you. And, you know, everybody, it's so true. No matter what approach you use, you're going to go through periods where you have drawdowns. It's just a normal, random part of trading. But what a lot of people do is they'll start with one approach. If it doesn't work, they'll immediately look around, look for another approach. You know, they may hop over to that one, and then now that one starts doing poorly, where the one they were using in the first place maybe starts doing well, but they hopped over to the next one. So, you know, in trading, you have to have an edge, right? You look for certain patterns that if you run them 100 times, maybe 65 times they'll be profitable, 35, 40 times they won't be profitable. But it's just like a casino. Every roll of the dice, every hand of blackjack, they have an edge. But if you can identify setups that have an edge, it doesn't mean that you might not have a bad string of losses right when you start, but that's totally normal. You know, you have to accept losses in trading. It's just part of trading. So when trading, you absolutely have to keep your focus on the longer term picture. You can't just bail out on your strategy the moment it starts generating a string of losses. You have to see it through to the end. Consistency starts with you. So get yourself a good approach, position size correctly, trade it. You don't know what's going to happen. It might be a win, it might be a loss, but that's trading, right? I mean, but you know, as long as you know it has an edge, in the long run, that edge should be able to work out for you. So, you know, don't get down when you have drawdowns. Don't get down when you have string of losses. They're just part of it. I have been through this so many times. You know, it's never fun to lose, right? But the key is position sizing correctly so that if you do lose, it's not that much and you can recover from it. So I hope that makes sense. Excuse me, boys. Sorry, guys. I just feel horrible. Hey, Frank B. Frank B says yes. Okay, good. Gamer Squad 2. Hey, how you doing? Thanks for coming by, Gamer Squad. All right. So, well, let's get on and see what is happening with today. All right. Well, let's start off with Apple. So, Apple definitely got beat up. Oh my gosh, did that get beat up? So we're at a 3677 RSI. We did lose the 50-day. We have lost the 100-day. If I remember correctly, if we get down to this 200-day moving average, we will have a confluence of about a 30 RSI and a 200-day moving average RSI. You know, volatility has crept back into this market. We could have, you know, a redo of today. We could have it tomorrow. It's certainly possible. We could also rally tomorrow. So let's really be careful today. You know, I know it looks like there's some good buys, but it may not be over. It may not be over for a while. So let's keep that in mind. But I will be looking to buy Apple down here at the 185 level if we can get a test of the 200-day moving average and a test of the 30 RSI at the same time. Max B, how you doing, Max? Lots of BB and 3 ATR channel breaks. Dell is interesting. Yeah, this is one hell of a day. This is one hell of a day. I mean, this, you know, it's pretty serious stuff with what's going on with China and the trade. If this is the right Dell. So yeah, I mean, we're holding the third ATR channel, which is good. We're at 34.31. We just have to, regardless of what happens here, we have to be careful. Silver is up today, not surprisingly, with, you know, the flight to safety. There is nothing here today for me to take a look at. I'd like to see the 5 cross back below the 20 and then back over. That's a good back tested approach. We used that approach back here on the 10th of July. We had this nice move. We phased out all the way up to here, but nothing on silver today. All right, advanced micro devices. Well, outside of the value zone, we lost the 50, we lost the 100. You know, who knows? Maybe the next stop is going to be the 200-day moving average. We're at a 3136 RSI, so at least it is holding the 30 RSI, but I don't think I'll be doing anything with AMD here. I'd really like to buy AMD down here. We'll have to see if it gets down there. So Amazon, boy, I mean, everybody wanted this up here. Nobody wants it down here. It's interesting, isn't it? So let's see. The low of the day here is 1748 and the 78, and the moving average is 1172. No, excuse me, 1750. So it looks like we did wash out the 200-day. We're at a 2361 RSI. I'm not going to do anything with Amazon here. It's under the 30 RSI. You know, there's a good back-tested approach of trading Amazon is if you close below the 200 and then back above the 200. So if that happens, if we do close below the 200 in the coming days and then back above, that's a good back-tested approach to trading Amazon, and that's what I'll be looking for, even if it is under the 30 RSI, because that approach doesn't have any filters, RSI filters. So I'm not going to do anything with Amazon today. It does look like it did catch support at the at the 6 ATR channel and also the 200-day moving average. So that is a confluence right there. You know, I mean, if somebody bought that there just using a close below the 200, I would totally understand that. But I'm going to just wait and see if we get a close back below and then back above. Excuse me, everybody. I'm sorry. I woke up with the flu. Boeing down 3% today. So has broken below the third ATR channel. It's at a 3517 RSI. You know, I'm just gonna have to wait on this one. The 30 RSI is down here at 315. So if in the coming days we get below here 315 and then close back above, that will be my entry point. But nothing on Boeing today. Ooh, Alibaba. Obviously, Alibaba is getting really beat up here with the China trade news. It's down 4.48% today. We're at a 2745 RSI. Nothing on Alibaba today whatsoever. For me to get interested in Alibaba, I'd have to have at least, at the minimum, close back above the 30 RSI for me to take an entry. Frederick's here. Hey, buddy. Good to see you. Thanks for coming by. That's our friend Frederick from France. And Steve Burns is here. Hey, Steve. How you doing? Steve says, looks like the stock market has the flu too. Oh, man. I'll tell you, I had the double flu today. I woke up with the flu, and then I saw this carnage. And, yeah, I feel like I have the double flu. Thanks for coming by, Steve. It's always an honor to have you here, my friend. Appreciate it. Frederick, you are sick and still doing your live. Take a rest, Greg. Hey, well, I'm going to be doing this anyway, so I might as well sit here and speak out loud while I'm doing this. Hey, Mount Doji, good to see you, my friend. Hope you're doing well. All right. So nothing on Caterpillar today. We are at a 31 RSI. You know, if it did close below the 30 and back over the 30, might be interesting, but there's some other ones that I'm looking at that I like a little better. Here is the DDM. We currently have lost the 200-day moving average. You know, there's a good back-tested approach on DDM is if it closes under the 200, back over the 200. That might be a place to enter in the market. But I'm going to have to wait and see if that happens. That exact trade we took back here when we closed the previous day, it closed under, then closed back over. Our stop would have been a close below the 200-day. Or if it went our way like it did, we would phase out all the way like we did. So, the key here is it's not predicting that it's going to go one way or the other. It's just lining up to give you a good risk to reward ratio. So, right here, if it closed above the 200-day moving average, could somebody take that? Sure, they could. They could take that with just a close back below, but I'm going to pass on this one today and see if it can close under and then back over. Frederick says, thanks to you, I limited my loss. Thanks again. Oh, I'm glad to hear that, Frederick. Good. Good. All right, so here is the Dow. We have that. We bought that on Friday. We will be getting out of that at the end of the day. Walt Disney taking it on the chin today. Lost the 50-day moving average. Does have earnings, I believe, tomorrow. So nothing on Walt Disney. Nothing on Walt Disney. We did have a good trade back on Walt Disney back here when we had a V1 inside the channel. Here's day one. Here's day two. Day two washes out day one. Day two closes above day one. No, I'm sorry. I apologize. It was a V2. Here's day one, day two, day three. Day two closes below day one. Day two washes out day one. Day three closes above day one. And this was a nice little gain that we had here. So Etsy, did look like it was holding support on Friday over the 200 and back at this previous low here. But today, like everything else, it just lost everything. So looks like it's losing the 30 RSI here today. So nothing there. Ford Motor Company. Well, it was under the 30 RSI at one point today. Looks like it's made it back over, which is good. I'm still not going to buy this. There's, some bigger, better companies out there right now. I feel like I like the technicals better, but it is working on a V2. I'm sorry, it is working on a V1, but then it has the third ATR channel right above it. All right, so Facebook. This pink line here at 1850, this is what the 30 RSI is. So intraday today, we did go below the 30 and we are just flirting with closing back over. This would be a potential for me to go long on this based upon the close under and the close back over the 30. So I am going to mark that and be watching that. 5 below, excuse me, is definitely below. So nothing on 5 below. Gold, having a big day today, up at the third ATR channel. So nothing for me on gold today. It's just too high. This was a previous trade. Same with silver. We took the 5 crossing over the 20, the 5 EMA crossing over the 20. And you can see that was a nice, easy trade. We phased out all the way to there. Google, my goodness. We gapped up like 120 points or something like that. And we have just sold off ever since. I was eyeing this earlier to see if it would hold at the previous high over here. This, acted as resistance initially, then we broke through it, so it should have acted as some support. If it had held this level and it had also held the 50 RSI, that would have been a possible entry for me, but I decided right now it's underneath, so nothing there. Goldman Sachs, boy, oh boy. Looks like it caused some support at the 100-day moving average. If this 100-day moving average lined up with the 30 RSI, I would be possibly buying it, but it's only a 36.56 RSI, so I probably would be keying off the 200-day possibly. IBB, I've been waiting to take a signal on IBB on the moving average crossover when the 5 crosses back over the 30, but obviously that did not happen, and we have had a big down day today. So, the key here, everybody, is just to be patient, sit on your hands, don't just stab at prices, wait for the price action to let you know that, there is some type of bottom in. Intel, boy, how quick they have fallen. Looks like we are catching some support at the third ATR channel. We're at a 3649 RSI. So nothing there yet for me. Nothing yet on Intel. It would have to go lower. It'd have to get under the 30 RSI and then come back over. Russell, I told you we hit our emergency stop today, 5%. Let me show you over here. 5% from my entry. So here was my average entry. It did hit the 5% from my entry, and that's my emergency intraday stop. So I am out of the Russell 2000. Johnson & Johnson holding in there fairly well today. Only down 1%, which seems like that would be up considered the rest of the market. But anyway, nothing on J&J today. Coca-Cola, we moved up nicely. We came into the value zone. We moved sidewards. This is setting up for a good V2 possibly tomorrow. So here's day one. Day two washes out day one. If tomorrow we do not gap and we're able to close back above Friday's close, that would be a really good V1 entry within the channel. So nothing there today, but something to maybe watch tomorrow. Lockheed Martin. Nothing there. Lost the 50-day moving average. Excuse me. So MasterCard does look interesting to me today. We had a confluence of the 30 RSI and the 100-day moving average. We did go under the 30 RSI at one point today. We did bounce right off of the 100, and now it looks like we have retaken the 30 RSI. So I will be buying this. My stop will be a close below the 100-day moving average. Here's the confluence of signals. The 100, the same time the RSI is at the 30. We did bounce. We did go under and back over. But it's very close right now, so I'm going to have to watch this. But this one right now does look pretty good. Merck, we do have Merck. We bought this back here at 82.99. Currently, it is holding above the 50-day moving average, so if it does, I will be holding this position. Microsoft caught some support at the third ATR channel, but that's about it. Netflix, man. Outside of the third ATR channel, very likely will come back and test those lows. So nothing on Netflix. Nike, we did buy Nike on Friday. Our stop is a close below the 200, and it definitely looks like it's going to close below the 200. So nothing on Nike. We're just going to have to take our loss on that. Philip Morris looks like it's going to lose its 50 and its 200-day moving average, so nothing there. PayPal, my goodness. I did buy PayPal back here on the 30th of July, and then I got out here with a small loss when it closed under the 100-day moving average. So this is just a good example to show you that when you have your stop losses, abide by them and get out. Imagine if I said, I'm just going to hold on and see what happens. Boom. So it's a 25.52 RSI right now. In order for me to get interested in this, at the very least, we'd have to close back above 30. So I don't think it's going to do that today. The Qs here, in addition to MasterCard, my other potential entry today is on the QQQs. This line here, which is 180.90, this is the 30 RSI. You can see obviously we've gone under the 30 RSI today. If we can close back above this line, I will take a full position in the Qs with the close back above 180.90. And then my stop from there going forward would be a close back under 30. But right now we're at 29.44, so it did lose it. But if it does close above 180.90, I am going to go ahead and add that today. Excuse me for coughing, everybody. My apologies. All right, Snap. We had the big move up on earnings. We are coming back into into value, so nothing there. The SPY. Again, the SPY here at 285.60, that's the 30 RSI. So if we're able to somehow close back above that 30 RSI today, I will go ahead and take a position in that. I don't know if that's going to happen. So I would have two positions. One, my overnight SPY, and then if it closes over the 30, I would take a second position with the close back above the 30, but only if it closes back above there. But definitely I will take the overnight SPY trade as usual. Square. Unbelievable. Down 7.5% today. 26.66 RSI. So again, nothing on this. You know, if it closed above 30, then potentially, but it's not even close right now. TLT are bonds. This is a flight to safety. Everyone is piling into the safety of bonds. It's a 77.84 RSI, so it is too high for me to buy right here. But if any of you have bonds, boy, that's been a great trade. Tesla. Not much on Tesla. It's making a little teepee here, but nothing on Tesla today. Twitter. Down 6% today. You know, we had that nice big run. What I'd like to see with Twitter is I'd like to see it inch its way down into the value zone, get some sideways movement, look for a V1 or a V2. That would be about it on Twitter. Natural gas. Not doing so hot. Not doing so hot. United Healthcare. Down a couple percent today. There's nothing there today. We did buy this back here on the 26th. Did move up for us. Did move up for us a little bit and then reverse back. But again, here's another example of, you know, I got out. I took the small loss. You know, I would only get back in if it closed back above the 200-day, but, you know, it was not able to do this, and it sold off strongly today. USO, which is oil. Nothing much there today. It's holding up pretty well considering. The dollar got up near the 6th ATR channel. That's generally kind of as far as the rubber band will move most of the time. Not all of the time, but we are right back into the value zone now. So again, moving sidewards here, looking for a V1, V2 entry. This is where I would be, you know, looking to enter a possible long to see if we can go back up and test this high. But we have a lot of work to do still. We are in the value zone, but we have to move sideways. We have to move sideways. We have to have a spike down, get a V1, V2 to trigger us in the trade. VIX. Excuse me. Well, I did buy VIX back here on the 25th of July when we had this V2 with the rejection of the 30 ATR, third ATR channel and the 30 RSI. It happened all at the same time. We went under the 30, back over the 30, under the 30 ATR channel, back over the 30 ATR channel. We had a nice V2 entry, and we also had a double bottom with a bullish divergence. We have this move down on this strength of bars, the depths of the bars. We had a little rally. We came back down, and even though we went lower, the MACD bars were shallower, showing that this second move ran out of momentum. So we did buy here. We had a great trade on this. We phased out all the way up to here, I believe. And then I ran out of shares, unfortunately. But even if I had shares, I probably would have gotten rid of the rest of those here when it rejected that third ATR channel twice. But it's up 12.63% today. You know, not surprising on a huge day like this. Let's see where we're at. Hey, we're only down 769 points. It was close. I think it was 1,000 points. I think we actually got down 1,000 points, which I think I remember one day that was 1,000 points. I think it was the day after Christmas, I think. It's a ways back there. But anyway, I'm very glad to have had VIX here. I mean, this mitigated a lot of losses on the down days and actually made quite a lot of money on this day here. So, you know, I mean, this is a down day for me, obviously, but, you know, you have to be grateful for the things that went your way. I mean, I actually hit a yearly high on Friday. Not now, but on Friday I hit a yearly high. So, you know, we did navigate the market pretty well during the drawdowns of last week. Unfortunately, you know, it got us full force today. But, you know, try to concentrate on the positive things too that went your way. You know what I mean? Don't just concentrate on the negative, because you don't want to your mind to start thinking negatively. Think about the things where I got out where I was supposed to. I made some money over here. I navigated pretty well last week. So, you know, it's important to keep your morale up. Verizon, nothing on Verizon here at all. Walmart, oh boy, look at this, everybody. Down almost 3%. You know, I was looking for an entry here when we came into the value zone. We moved sideways, but I didn't get it. I didn't get a V1 or a V2 entry, luckily, right? So I stayed out of this mess. Energy is just getting clobbered. It's at a 26.35 RSI, so nothing there. Financials, well, excuse me. Financials did get under 30 RSI at one point today, it looks like. Let's take a look. Ooh, it may have actually just pegged it right at 30. Don't think I want any part of this today, though. Real estate having a big down day as well. Nothing there. Utilities, boy. That was when I saw the futures, that was my one hope today, that the utilities would at least go up, but they are down as well. So, you know, I took the entry here on this V2, day 1, day 2, day 3, day 2, washes out day 1, day 3, closes above day 1. My stop is a halfway of the washout bar. This was the washout bar. So this line right here, 59.67, that is my end of day stop. So if I close under 59.67, I will go ahead and exit utilities. Healthcare does look like it rejected the 30 RSI today. Take a look at the weekly on this one. Yeah, I mean, you know, this would be a potential here. I'll mark it and see if we close inside the channel. So let me quickly take a look at my current positions, and let me place some orders to make sure we can get out of those, because we're gonna have to get out of those for sure. So diamond, be nice if it rallied into the end. Instead of taking a 10-yard loss, maybe take a 7-yard loss, but it has rallied off the low, so that is good. But this, I will be selling this today. IBM, I did hit my intraday emergency stop. I'm out of that position. Merck does, at the moment, look like it's holding above the 50, so I will keep that. Have an order in to sell Nike at the close because we lost the 200-day moving average. Again, the SPY, I am going to buy this at the end of the day with my regular overnight position. However, if we do close above 285.60, I will also add a second position in SPY with the close under back over. You know, for an index like the S&P 500 to actually go below the 30 RSI is very difficult, just like it's hard to get it to go above the 70 RSI. So, but that's the plan on SPY. If we close above 285.66, I'll take two positions. If we close under, I'll just take the overnight SPY position. And then XLU, looks like I'm going to have to get out of that. So let me just place my orders here. All right, that one's done. All right, that one's done. So, excuse me, everybody. Apologize for the coughing. All right. So Diamond's set to sell at the end of the day. Nike is set to sell at the end of the day. XLU is set to sell at the end of the day. SPY is going to buy at the end of the day just by itself, but I am going to watch this for that secondary position. And Merck looks like it's okay. So let's go through and take a look at our potentials here. All right, so Facebook did go under 30, back over 30, so this is a potential. Google, if it closed above 50 RSI while testing this previous support below and then bouncing off it, I might consider it. So it's a possibility. MasterCard, I do like MasterCard, so I am going to enter my order to buy my, this will be a regular position in MasterCard, or a full position, I should say. 10% position size, because that bounced off of the 100-day moving average, rejected the 30 RSI. All right, so that's done there. All right, so that order is in to buy MasterCard. And if we close underneath here, I'll just have to cancel it at the end of the day. Merck looks fine. I will be buying the Qs here if we close above 180.90 because it went under the 30 RSI, back over the 30 RSI. So that is right on the button. We'll do the best we can to see. Let's see, 180.90, and right now it's 180.82. So it is going to be close. S&P does not look like it's going to be that close. And healthcare. So I'm going to let healthcare go. The key here, though, is, deciding between Facebook and the Qs. Right now, the Qs are under the 30. Facebook, right now, it's over the 30. What else do we have? So Facebook, we have the third ATR channel downward sloping above us. The Qs, we have more room to run, better risk to reward. Let's look at Facebook on the weekly. So on the weekly, we are in the value zone, and then the Qs on the weekly, we are in the value zone, and it did reject the third ATR or the first ATR channel. So right now, all in all, I would prefer to buy the Qs, one, because it's more diversified. It's 100 companies instead of Facebook's just one. But again, it's going to have to close above the 180.90 level in order for me to do that. So MasterCard looks fine. All right, let's see where we're at. 765 points down. Well, we've had some kind of comeback, right? I don't want to scoff at that. Hey, Murat's here. Good to see you, Murat. Murat says, I think Twitter is going to close the gap first. Could very well be. Those things are kind of sometimes like magnets, they're strange attractors is what Bill Williams calls it. Max says TXT is strong. Yes, it is, for sure. Mount Doji says Qs are above 30 RSI. Yep. Well, no, 29.76 right now, at least on my charts, Mount Doji. But we'll see what happens here in the last few minutes. Max B and work. Looks like this is a newer chart because I don't have all the technicals. It's a hell of a V1. That is a hell of a V1, I can tell you that. Yeah, they were earlier. They were earlier. We'll see if they close above. Right now under. Facebook's still over. I'll tell you though, the thing that concerns me about Facebook is the third downward sloping ATR channel and the 100-day moving average just right there. You know, if you look at the cues, it gives you a much better possible upside. So let's watch that. All right. Let me put this order in for the cues. Do some math here. All right. Okay, so I think I'm going to let Facebook go. I'm going to let Google go. MasterCard, I am going to be buying that at the end of the day. That may end up being the only position that I buy. Merck's hanging on by a thread. Q's under 30 now. S&P under 30 now. So we're down about 800 points still. Diamonds are going away. IWM emergency stop. Merck just hanging on. Nike, we're going to get out of Nike. And then XLU, we have an order to sell XLU. All right, so we're looking pretty good. You know, obviously this is one of the biggest down days point-wise in the history of the market. So, you know, these things don't happen all the time, but they can happen. So like I said, it's important everybody to position size correctly. I mean, if you would have went 100% in on Friday, today would have been a pretty ugly day. And you know, the main thing is if you lose a lot of money, then people tend to become destabilized and they're like, screw it, I need to make it back. I need to like double and triple up to make this back. You know, it took me a month to make this money. Now I've lost it all in one day. I have to make it back. I'm not going to grind it out for another month. Well, that's not the right way to look at trading, everybody. Sometimes these things happen and you're just going to have to grind it back up again. And, you know, I mean, I always feel very confident that I'll be able to grind it back up again. But still, it's disappointing, right? But the worst thing you can do is to become destabilized and make bad decisions, because this may not be over at all. I mean, this could go on for weeks, everybody, right? Keep that in mind. This could go on for weeks. So, you know, don't try to make this all back in 1 second over one night, you know, and then go, okay, well, I'll do it this time. But then if I make it back, then I'll go back to trading the right way. I've been there. Everyone has. But just please don't do that. Just make it back slowly, right? Just because you lost it quickly does not mean that you have to try to make it back quickly. Just make it back slowly. All right, so Merck looks good. Nike's rebounding, but that's definitely out of here. SPY? Yeah. So the Qs. Ooh, right there, everybody. And then master. This is one for the record books, everybody. This is one for the record books. We were right here and experienced it. All right. So if the Qs do not trigger, I'm going to buy Facebook. If the Qs do not trigger, I'm going to buy Facebook. I'll target the 50 moving average as my initial stop. I mean, as my initial profit target with the close below 30. So we'll see what happens. But I hope the Qs, so far, so good. So far, so good on the Qs. Yeah, we've made back a lot of the loss. That's good. Dow's down 731. Amazon did bounce off that 200. Huh. Now Google's right there. Okay. What do we have? 3 minutes. So Facebook has definitely bounced off their well. The Qs are above and holding. Okay. Merck, we're fine. Nike out of. SPY. It's closing in. It's closing in on the 30. XLU, that's definitely out of there. Qs are going to be close. So we literally have 1 minute. MasterCard is fine. The Qs are right there. All right. I canceled the Qs because they're not above, so I did cancel. So no Qs.
Order filled. Order cancelled. Order filled. Order filled.
All right. That's it. So the Qs closed at 29.80, so I did not buy them. Boy, what a day, everybody. What a day. So let's see. We did get MasterCard. And let's see where we got filled on Master. Hasn't come through yet. It's one of those delayed ones.
Order cancelled.
All right. Okay. So I think I'll get that fill on MasterCard here in a second. Ramble, hey buddy, good to see you. I think this is going to be the market till the election and some. Could be. Max B says, damn, Twitter stopped me, break even, and rallied back. Yeah, sometimes that happens. Robots do this on purpose just to clear up the stops. They do very shallow, sharp moves. Yeah, he's talking about the algorithms. And Murat says, if I will be able to watch the market, I keep my stops in my head.
Order filled.
There's our MasterCard. 256.84.
Order cancelled.
256.84. All right. Yep, right there at the close. Mount Doji says, dang QQQ. Yep, I know. I know it. Closed right underneath. Oh, well. Murat says, if I will be able to watch the market, I keep my stops in my head. I was hit by that kind of stop clearance many times before. Yeah, that's another, excuse me, that's another reason why I like to trade at the end of the day. I mean, like I did hit my emergency intraday stop on IWM today, but I just knew where that was going to be. And when it hit it, I didn't even think about it. I just sold it. Don't forget to hit that. Ramble Ron says, don't forget to hit that like button. That's right. If you guys get to hit the button. So listen, if you guys have any questions about what I did today, or you have any questions about anything else, please let me know. Before we get into the answer part, I do want to just let you know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. So, one-on-one lessons are always better than, the live stream. I mean, I hope the live stream's good, and I hope you're getting something from it. But, obviously one-on-one, I learn more about you, exactly what your goals are, and then I'll I'll create a lesson plan specifically for, your goals, your financial situation, how much time you can spend in front of the screen. So, if you've been thinking about it, please reach out to me. My hourly rates and my emails in the description of this video, and then also you can send me a message on Twitter. And then, like Ramble said, if you could do me a favor, hit the thumbs up button. I would appreciate that. That helps get the channel out to more people on YouTube. I've had a lot of people email me and say, this channel's really helped me. I'm losing less, or I'm actually making money now. And, I'm really glad to hear that. And a lot of people need help with that. So if you can, hit the thumbs up button and, help me help them and spread the news about the channel. Murat says, actually, this is something I learned from you, Greg. If I didn't wait until the close, I was going to close a portion. It just moved 2% up from the bottom of the day in the last 45 minutes. Oh, I see. So actually, this is something I learned from you. If I didn't wait until close, I was going to close a position. It just moved up. Oh, I see. Okay. So what you're saying is if you weren't around at the end of the day, you were just going to close it out? Maybe I'm misunderstanding what you're saying, Murat. Boy, excuse me. Man, I woke up this morning and I was like, man, I am sick. I can just feel it. I am sick. And then I went and looked at the screen and I was doubly sick. And it just got worse throughout the day. But anyway, we got through it. We took a loss today. I mean, I took a loss today, obviously. It's going to take a while to get that one back, but that's part of the game. That's part of trading, everybody. It takes a while on these big losses, but again, this is one of the biggest down days in the history of the market, not percentage-wise, but point-wise. So, I always look at these things as just setbacks, not like, oh, screw it, I'm done with trading, right? Because I've been through this so many times before, and I always have been able to make it back. I suggest the same thing to you. Take it slow. Don't think you have to make it back all at once. Just incrementally. Just keep doing the right things. But there are a lot of people that made a lot of bad decisions today, loaded up too much because they thought it was too low. There's a lot of emotion in the market right now. Excuse me. All right, so we did buy our SPY, overnight SPY, and we bought that at 283.82. $283.82. Well, how about that? That's good. We're in the money already. All right. And then MasterCard, we got 256.84. All right. Okay, everybody, listen, if you have any other questions, please let me know. Otherwise, I am not going on a hike. I'm going to bed. And hope we have a little bit better day tomorrow. So, last chance for questions. Okay. Well, listen, thanks for enduring me today. I know you probably barely understand me with my voice. Steve Burns says, remember everyone, volatility cuts both ways. Yes, it does, up or down. And we are in a high volatility market right now. So, be careful. Thank you, Steve Burns, for reminding us of that. Max B says, thank you for your review, Greg, despite the flu. Wish you well. Thank you. Murat says, today one of my positions was down a lot and it crossed my mental stop loss intraday, but I waited before closing my position out until the 5 p.m. when the market closed, and it just moved above my stop loss. Oh, okay, good. Good, so you kept it. Steve says, I hope you feel better, my friend. Thank you, Steve. Thank you. I hope I do too. Summer flus are weird because you feel like you should be outside, but you don't have it in you. Ramble says, have a good one, feel better. Thank you, Ramble, appreciate it. So, Ramble, thank you. Murat, thank you, sir. Steve Burns, it's an honor. Thanks for coming. Max B, thank you for coming. Mount Doji, good seeing you, my friend. Who else do we have? We had Frederick, good seeing you from France. Thanks for coming by. And Gamer Squad 2, good seeing you. Thanks for coming by. And Frank B. So, all right. Well, I'm going to bed, and we'll see what happens tomorrow. But hopefully you can make it tomorrow during the last hour of the market, and we'll see what happens with this market. So, all right. Take care, everybody. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.